The highlight to start the week is the markets. Number one, we talk about midsummer and how to trade slower markets. Whether it's middle of the summer, slow markets could happen at any time during the year. And right now, know where you're at and manage your expectations accordingly. You don't want to be in what's called a personal fast market, where you have an above average amount of trades in a low volume day. You have nothing to show for it. That's even if you're trading well. But right now, markets are in that let's wait and see for our next piece of news that's going to move us, whether it's information on this pandemic, whether it's pricing in the U.S. elections. This particular week, we're ahead of the first two, we're at the start of the first two conventions, Democrats this week, Republicans next week. And I think that as we get on the other side of these conventions, the other side of the summer, there'll be some more information over the next 3 weeks on what side of the mountain, where are we at in this pandemic. We're not at the top. We're not at the bottom. We're almost like plateauing, and I'd say we're right in here. And the markets do not want to see something like that. They just want to see a slower kind of sideways to lower drift in cases nationwide and then even in most of the individual states. But that's pretty much where the markets have this pandemic with new cases. If you look at charts, though, you have to get good at knowing, especially after they happen, where moves are beginning and ending. You're trying to get a sense of where they're beginning if you're looking to get long down in here. Very difficult to do it when it was down there. That was the play, but it wasn't easy to hold on at all. And then here, getting out of a long if you were long or getting short if you were bearish, there were things that had happened up there with just simply shorts getting squeezed, and a lot of them. We talk about shorts puking is what we want to see before you were to get short, we're to get short. And you see that over here in our what's called our puke tool. But that aside, you got to, let's say you did nothing down here, you did nothing up here. You still want to identify that as being the move to see where retracement could come and still be healthy for the upside to be intact. Let me draw it over here. What kind of retracement is healthy for the upside to be intact? Why is it upside? Because the move went from here to here. And once you identify it, you can get a sense of how healthy the retracement is. If it starts coming back the entire move, then you question the bullishness in this case. Now, in here, and when it happened, we are on it, and it's important to be part of a group that's on stuff that changes the market. Right in there, we were trading about 78 even. McConnell came out and kind of, showed the stimulus still might have a pulse. That didn't rally us a great deal, but gave us a little bump. Maybe was sending us where we were already going to go, albeit slow and methodical, because that's the context of last week. So far, it's the context of a summer Monday in the middle of August. And so keep that in mind. The other thing that I thought about over the weekend that I want to cover really quick is in anything that in trading especially, there's always the process of getting to the right question. If you listen to my videos enough, you're in the room long enough, you know that it's not about the right answer, it's about the right question. If you're asking the right questions, you'll get to the right answers. And so just like with order flow, like all of this that we analyze day in and day out has everything to do with people's orders that mean something. What question do you ask when you see and recognize and identify an order? And so this progression is about orders and why do traders use particular orders, the flow of those orders, and what questions arise from that information begins to put you on a path to reading order flow correctly in real time. And you don't have to watch dozens and dozens of YouTube videos necessarily. But you do have to always put yourself in a position to know what the question is and when to ask it, because that's going to lead you to the right answers. So when reading order flow and doing anything in real time is always more difficult than afterwards. I think people know that and understand that and can respect it. That's where the saying hindsight's 20/20. And so how do you work on getting better at reading the real time? Finding out what the right questions are when you recognize big orders, small orders, longs puking, shorts puking, and all the rest. I'm in the process of going over this because I'm in the process of putting as shortest but high quality content in a very kind of condensed but powerful order flow sequence. So people could unequivocally say, you know what, after watching this video or these videos, I get it. I'm understanding it. I'm understanding how it could create an edge and help pick better locations. Trading is all about location on the chart. Have a safe rest of the day. Remember, if you have an average amount of trades you make a day and you're a little above average in these conditions, you probably don't have much to show for it. So you have to, it's your volume to the day's volume. If it's a below average day in the market you trade volume wise, well, your personal volume should be below average. Because generally, above average volume in a day like today, you don't have much to show for it. So be careful and don't be afraid to exit stage left, especially if you're up.